I love the first time home buyer mortgages and all the zero down programs. And I love veterans and talking about the zero down for veterans. And there's some really neat stuff out there with investor cash flow loans and bank statement loans, and even the jumbo loans with 10% down, which is a huge difference than it ever was before. So I wanted to make sure that we cover all of these different ones.
Welcome to the Jennifer J. Hammond Podcast. Jennifer is a licensed realtor, educator, speaker, and best-selling author. Jennifer's goal is to help you find your yay in every day.
Let's talk mortgages. So I love the first time home buyer mortgages and all the zero down programs. And I love veterans and talking about the zero down for veterans. And there's some really neat stuff out there with investor cash flow loans and bank statement loans, and even the jumbo loans with 10% down, which is a huge difference than it ever was before. So I wanted to make sure that we cover all of these different ones. Especially first-time home buyers, I think that's really important, but also as investors, so often there's some amazing loans that are out there right now that a lot of investors just don't think are out there because they've thought, oh, well, the market's too hot. It's too competitive right now. This year, 2022, is just seemed like it started off with a bang, with just crazy busy and low inventory. So not a lot of things for people to choose from. So I want to talk about all these different mortgages today. However, Scott, we want to start from the beginning. Who are you? I want people to know a little bit about you. And we've known each other for a really long time. And it's fun to come. Yeah, it's so much fun now when I talk to you because I've seen you you've been at different banks, and I've seen you kind of through all sorts of like first-time home buyers, veterans, all sorts of people. And I'm so grateful to you because you always make sure you have this great team surrounding you. And I think that's one thing we all have learned, especially through this pandemic, is that we need a team, it's just like our family. We need our family. We need our team around us to help us, make it through all the ups and downs especially of real estate. It's been an interesting time. And even though it's good, it's also been very, very challenging. It's challenging for buyers. It's challenging to find the property. It's challenging for the real estate agents trying to make everybody happy. And for the mortgage, for you and your team, it's challenging again to make everybody happy with exactly what they want, but also making it known what's available. So let's start with your history. Who are you, Scott Shelton?
Good morning, Jennifer. Thanks for having me on. I'm always happy and consider it a privilege to be on the show with you. So I'm Scott Shelton, SecurityNational Mortgage, 30 years in the business. Can you believe that? This year will be 30 years in the business. And so I have to be honest. I have a fresh take on this business. I'm energized. I'm excited amidst all the challenges and changes. So I love what I do every day.
Yeah. And you have a great team. I think it's really neat. Talk a little bit about your team and a little bit about your mortgage, because I want to talk about these crazy investor cash flow loans, no tax returns. What? There's some great stuff, bank statement loans. But again, I know it's being done. Some people go, oh my gosh, I got a bad taste in my mouth from those words and those things from before. So I want to talk about why they're different as well. But before, let's talk about your team and who is your bank? Because now you're with a bank, I say now, it's been a while.
So SecurityNational Mortgage, part of the SecurityNational family of companies, is not a bank.
It's not a bank.
We're a publicly traded mortgage company, just about 30 years old, extremely strong financially. We love what we do. We have some portfolio capability, which we'll talk about in a little bit. My executive team is extremely strong.
Wait a minute, before you talk about your executive team, explain that, because I think even for me, I say it as a bank. What is the difference between a bank and what you guys are doing?
So we're a mortgage company. Mortgage companies usually, they're not banks. Banks have their own ways of getting money, but the mortgage companies are a little different animal. And just an interesting statistic before I go into that, over the last couple of years and recent months, we see a trend of home buyers moving away from banks more to mortgage companies.
Yeah, and that's one of the reasons I misspoke when I said you were with a bank. I've seen you with banks in your past history.
Yes.
And even I say that I misspeak and call it a bank when it's not a bank. And that's why I wanted to address it first, because it's a big difference in the flexibility, at least from my viewpoint, in the flexibility and the things that you can do. Because I just was talking about one of these mortgages last night with some people, and they said, that's not true. And I started laughing, and I thought, oh, it's because they don't understand, again, the difference between a bank and a mortgage company, or a company, again, even credit unions, there's differences, and you need to understand what financial institution you're working with, right?
Yeah, that's absolutely true. And one of the things that I communicate to our internal team, loan officers, processors, underwriters, closers, everyone here, is that we can play inside the sandbox. And to realtors and builders, I tell them we can also play outside of the sandbox. So we have that flexibility with our in-house relationships and that we have set up to do normal conventional FHA, VA, USDA, jumbo loans. But then outside the sandbox, which we call non-QM, we can do investor loans that don't require certain documents. We can do bank statement loans for self-employed. So it's a whole different world to live in. And to be quite honest, with this flexibility, you have to manage it well, because we're not going to repeat and have no intention to repeat the Great Recession years of 6 and 7 and 8 and 9. So that's the difference. As a matter of fact, this week, speaking of something like our investor program, someone had made mention of the fact, Jennifer, that, oh, you guys are trying to recreate that nasty recession market we had years ago.
Right.
No, that's not the case. We're not looking to repeat that. We're actually looking at documentation. We're actually requiring a down payment. We're actually saying you have to have satisfactory credit, which is so much different than those recessionary years ago. So no, there is common sense principles. I do see some investors coming into the market that are trying to duplicate some of those old products, but that's always the case.
Yeah.
So here we are. We're in an inventory right now. We're in a market that has very little existing home inventory. First-time home buyers are competing against multiple offers in a rising sales price appreciation market, and move-up buyers are trying to move up, but it's hard to do so because if they sell their home, where do they go? And guess what? We have a lot of investors coming into the market.
Yep, exactly.
So with all those different dynamics, Jennifer, I'm really excited because we have the products and the portfolio to provide homeowners, home buyers, the opportunity to build wealth.
Yeah. And the thing that I love that you say it that way, because also when you say you're excited, I get so excited, even in a market that's challenging like this, because it also, to me, it provides an opportunity for us to be better, at explaining the different mortgages, explaining the different opportunities that are there. And even with our clients, how do we communicate with our clients about what's out there and what would help them and what could be. And one of the examples I want to use, which you and I have talked about before, and you just mentioned, is the USDA loan. It's a loan that is probably I think, one of the most overlooked loans that's out there. It's a really neat one because it's zero down. And even in the Washington, D.C. area, there's places where, and I always laugh because people say, well, you can't use that loan in the D.C. area. And I'm like, well, actually, let's look at it. So let's take a look on what is a USDA loan.
That is a rural development housing loan with a zero down payment, no mortgage insurance, and it provides flexibility to buyers looking to purchase a home as long as they fit within a certain income restriction. And that's based upon counties across the United States. Specifically, let's use the Washington, D.C. area. There are pockets around the D.C. metropolitan area that are USDA eligible. And then there are certain pockets that are not USDA eligible. But then you got to West Virginia. Basically, all of West Virginia is USDA eligible.
Right.
So you've got to know very well to the detail your state, your county requirements, so that you can offer your home buyer, your customer, your client, the best options.
Right.
And that's so critical in our marketplace today.
Right. And that's why I wanted to kind of just today, I really wanted to explore a bunch of different kinds of loans and what's happening and what you're seeing in the year 2022, because it keeps changing, as it always does in real estate. Nothing ever stays the same ever. And I think it's really fun because the USDA loan, I think is one that is so overlooked. The other one that's a zero down payment that, again, I'm always surprised when I end up meeting a veteran who doesn't know about the VA loan. So I do want to talk about that just for a minute, and then we'll talk about some of these cool investor loans.
Veterans, in light of everything going on in the world right now, I just want to give a quick shout out to our veterans. The potentiality of any engagement or involvement in what's going on around the world. I am, and I know you are, from the bottom of your heart, Jennifer, so thankful for what our United States military and our veterans do for our country. So having said that, I think the VA loan is the best loan in the marketplace.
Yay!
Zero down, no mortgage insurance, up to $1.5 million. And you say, well, what veteran's going to buy a house? Well, there are generals, There are different folks who have income brackets within the United States military that can qualify at higher levels.
And there are lots of veterans, I'll tell you for sure, that have gotten into real estate investing or are entrepreneurs in one way or another. And so their income is not just from one source. Still being able to come up with that down payment prevents a lot of people from being able to move forward and purchase a house. So looking at all of the zero down payment programs, it's really critical. And especially for veterans, again, I'm always surprised how many veterans do not know about the zero down payment mortgage.
Zero down payment. As long as you have full entitlement, full eligibility, you can do a zero down payment on the purchase of a primary residence. Again, I think it's with no mortgage insurance. And no default insurance required for a veteran because of their service to our country. It's actually insured by the Veterans Administration. So I honestly believe it's the best loan program. And even though we've seen a rise of interest rate lately, in our marketplace, it still is a very, very favorable loan program.
And one thing I want to mention, so we don't forget, if you're listening right now and you know someone who's a veteran who may already have a VA loan, you may also want to mention to them. So if you know a veteran and they don't know about this amazing loan, please share the good news. Please share it with people. And the other part of that is if you know a veteran who does have a VA loan, you may also want to know a little bit more about the VA Streamline Refinance. Will you talk a little bit about that, Scott?
There are still some veterans out there who have the ability to refinance their home, whose interest rate may be higher, who may need to take some cash out. So those opportunities exist in our current rate environment, and very little to no documentation. It's a great option to take advantage of as a veteran. And you would call a lender that you trust, or call a realtor that you trust who may know a lender that they trust that can give a referral. It's, again, going back to the team concept, reaching out to your sphere of influence and people that you trust to find out who can most efficiently, effectively, and smoothly present to you the information on the VA loan and close you satisfactorily.
Yeah, I think it's really, it's so important to understand what your options are. And sometimes just knowing that there are options, it just can change everything for someone if they're in this situation where they need it.
It really does. And again, goes back to team, having people around you that know how to communicate with the people who are making decisions in our business every day.
Yeah. So let's talk about the jumbo loans that are 10% down and talk about what is a jumbo loan, because anyone who's listening who doesn't understand what a jumbo loan is and why that 10% down is so significant.
Sure. Anytime you make a loan, take out a loan on a conventional loan with less than 20% down, or any loan with less than 20% down, except for that VA loan, and we spoke earlier about the USDA loan, no mortgage insurance. But a conventional loan with less than 20% down, you normally carry mortgage insurance. That's default insurance should you ever stop making payments on that mortgage. With that being said, 10% down, like for example, we have a 10% down payment program up to 1.5 million with no mortgage insurance. And so normally you have to pay mortgage insurance at 10% down. But here in this case, there are loan programs in the marketplace where you do not have to do so, as long as you have the appropriate credit score and the income to satisfactorily qualify to carry that mortgage debt.
I think that is really powerful because, again, so often when you get into those jumbo prices, people are looking for 20% down. And again, that cash, those chunks of cash can really prevent somebody from being able to purchase. And so being able to have a 10% down program is something that is really valuable. Again, life is about having options and knowing what those options are out there for you. And part of this, when I wanted to go through these, I realized that I found, I hate to say it this way, but I have found so many real estate agents who don't even understand the difference in the loans. And I say that in that way of that, I think the more that as a real estate agent, as a professional, that we know these different programs, we can also help point our clients in the right direction, or just stretch their mind to think, well, wait a minute, you had been thinking about only the thing that would give you 20% down. Have you run the numbers? Have you looked at something that's a 10% down? And is that something that is feasible, again, within your budget and with all the things that you're looking for? So if you don't know your options, so often you can end up just not being able to help somebody in the way you want to. So I found many real estate agents that I talked to. It was one of the reasons that I wanted to make sure that we did this specific show, is to really go through these different types so that, again, hopefully it'll stretch their minds and their thinking, and how can they help another person. And the same thing, if you're just a buyer, and I say just, meaning you're not a professional in this industry as a real estate agent or a mortgage person, I hope that you'll also look at the different ways you can help by knowing this knowledge, because you might be able to run into someone who is a veteran who didn't know about it, or who's in a rural area who could use a USDA loan, which is so exciting, because you should look at it. And again, you can go to the websites and look at these things like VAs. You can go to the Veterans Administration and you can get some basic guidelines, but I highly recommend you call Scott and talk to his team. Him and his team, they have great people. And I know you're always willing to talk to people and go over the different mortgages, right?
Always. And you know I am. It is a misnomer in the marketplace, and you see more and more commercials and different things saying you don't need 20% down to buy a home. And we want to dispel that notion, that thought process, that thinking, because you don't. We have 0 down options. We have 3% down options, 5% down options. As long as you have the income and the appropriate credit score to qualify, it's important that you have a team, a realtor, a lender. And lenders are all over the board. Some can play inside the sandbox and do it extremely well. Some play outside the sandbox and do that extremely well. I like the fact that we can do both.
Yeah.
And what that does is that when I engage with a customer and or a realtor, it helps us to be able to cover all the options. And I don't mind saying, hey, you know what? We don't have an answer for that.
Mm-hmm.
That's not a problem. We don't have an answer for that. And if we don't have an answer for that, I will help to try to find that answer with someone else. And I'm okay with that. So again, we're looking to take care of the potential home buyer, the customer, so that we can help them have home ownership.
Yeah. And it's really important to just be able to know that there's options and to know that there's people who you can talk through the options with and really understand that. So now let's shift gears over to investors. And of course, we'll open it up for questions in a little while, but I wanted to get through the one thing that, again, that I know that scares people: the investor cash flow loan, no tax returns, no income verification, no employment documentation. And I think that when you look at some of that stuff, you think, are we going back to troubled times? You know, the too big to fail kind of bank scares that really tortured and scared many people. So will you talk about these?
So, for example, we have in the marketplace, and like we have one, it's a portfolio loan for investors where the down payment's 25%. And a certain credit score is required, no tax returns, no banks. I mean, we do verify bank statements with assets, but no tax returns, no employment, and we verify the assets. Years ago, Jennifer, I could put a few extra bullet points on there as well, like no heartbeat, no pulse,
Right.
no, nothing else, you know? And that's what the kind of lending picture looked like years ago. But those bullet points no longer exist on our marketing right now. And they will exist on our marketing. We're a sound company. We're going to continue to be a sound company with excellent leadership. And that's exactly what you're looking at when a home buyer comes to purchase a home. Who am I dealing with? So investors, you're looking to purchase a home, and there's tremendous and growing opportunity out there. There are loan programs where you can go with you can go the Fannie Mae, the Freddie Mac route, as little as 15% down or 20% down. You're going to provide W-2s, pay stubs, bank statements, and tax returns. So those options exist through Fannie Mae and Freddie Mac. The other options are portfolio programs or even non-QM, non-qualified mortgages, where they play outside the sandbox and no W-2s, no tax returns, no pay stubs. You just need to show proof of assets to purchase your home. And in our case, we require, since it's an investment property, we require that you show you have ownership of a primary residence. So the options are out there. 25% down, we feel as though there's enough skin in the game and a commitment that's given, not zero down. I remember zero down. I remember 5% down back in the day, but that's not where we are anymore.
Not for investors.
Not for investors. But years ago, investors could do that.
Yeah.
No, not anymore for investors. And it's a growing market, and investors are purchasing homes.
Absolutely. So one thing you talked about, the qualified mortgage, and you talked about, being inside the sandbox and outside the sandbox. For those of us who are not in the business, I want you to explain that as if you're talking to somebody who's a brand new first-time home buyer who doesn't know any of our jargon in our real estate profession.
So a qualified mortgage, usually Fannie Mae, Freddie Mac, requires W-2s, pay stubs, bank statements, tax returns, because those loans by most lenders are sold to Freddie and Fannie in their conservatories, placed in their pools The non-QM, non-qualified mortgages, are portfolio loans that lenders hold themselves. And then the rules are a little bit different. Usually the down payment is a little bit higher to substitute for lack of documentation, or minimal documentation would be a better way to say that. In this case, for example, here's a big advantage. If you, on an investor who lives in the United States, we run a credit report. Investors who do not live in the United States and live in Canada, live in China, live in another country, we do not require a credit report.
What do you require instead?
Proof of ownership of a primary residence with a good payment history.
Yeah.
And most times those people who live outside the US, they're called foreign nationals.
Right.
They don't have US credit anyway.
Yeah.
So we just have to show proof that they have ownership of a home and an excellent payment history.
So one thing when we talk about this qualified mortgage, and again, when you talked about inside the sandbox and outside the sandbox, again, I think for some people that doesn't make sense in that thinking we're doing something illegal, or you're talking about doing something illegal. And it's just a matter of the guidelines. And when you keep talking about Freddie and Fannie, I know exactly what you mean, because those are government backed loans. And so there's a difference between that. And when you go into dive a little bit deeper into the difference between, like with what you do, not being a bank, why you have the option to either do government backed loans, and what Fannie and Freddie, what do they mean versus what you do? Because it shows your magic. I want to go behind the curtain at the Wizard of Oz, Scott. You need to share it all.
I don't know that there is any special recipe there, but I do understand your question, and I'm thinking it through even now as I speak. Definitely nothing illegal taking place. We don't have time for that. Everything we do is we're transparent. And again, like with us, we're a publicly traded company, so we don't have time for that kind of noise. But, with that being said, most folks let's look at the investor program, which Fannie and Freddie has recently increased some adjustments to those programs for second homes and investment properties. The attractiveness of those properties for Fannie Mae and for Freddie Mac are less attractive. So they're making it so that obtaining financing is more costly. Mm-hmm. With that being said, they still require W-2s, pay stubs, bank statements, tax returns, and rightly so, in order to qualify to fit into that bucket or pool of loans. On the non-bank side, there are lenders out in the marketplace, and very good lenders, I may say, out in the marketplace that can do non-QM, non-qualified mortgages that are not attached to Fannie Mae and Freddie Mac, and that can offer loan programs that require a little more down payment, as I said earlier, moments ago, but with less documentation. So they still have a commitment and skin in the game, so to speak, but they hold those loans in their portfolio. That means they don't sell those loans. That means you'll always be making your payments to them unless they do something down the road with that loan. I don't know if I can be any more specific for what you're looking for, but
good. I think it's really important that people understand the difference between government backed versus the thing. And even portfolio is a term that a lot of times people don't understand what that means. And one of the biggest things I would say is that you just said that you're always going to get to pay that payment to that company. And so often when someone has a mortgage, their mortgage may be sold 2 or 3 times, and it keeps changing who you pay. It can be very confusing, and it can also cause mispayments and all sorts of confusions. So it is really nice when you know that it's going to stay with the company that you ended up originally getting the mortgage from. So that was part of why I asked you to dig deep in that, is so that people can understand how does it, because again, the bottom line is what's in it for me when someone's listening. What do they need to know that to be able to make a decision on what kind of mortgage they want, or even what mortgage company they want to work with, or if they're going to consider working with their bank, and do they really understand the differences?
Sure. Sure. And Jennifer, that's the critical difference I see in today's market. And it's so critically important. It's being able to have these various loan programs that we're talking about and presenting them all to a prospective home buyer in the marketplace, instead of you or me as a lender making up my mind, oh, they should only do this product and nothing else. No, you have to give them, it's fair, it's equitable, that you give them the opportunity to understand this is a huge investment. It's a ton of money. And it is the largest emotional purchase outside of marriage I think anyone will ever make in their life. So you have to present all the options to them, and even loan figures and numbers, so that they can get a full grasp and understanding of what that picture looks like. And then they can make a good decision.
Right.
And that's the bottom line. And that keeps us out of financial jeopardy.
Yeah.